جزاكم خيرا. السلام عليكم ورحمة الله وبركاته. So, as I mentioned just after Salah, inshallah we're going to be doing a talk on Islamic home finance, all the various models available for Muslims today. We're going to start with conventional models and then talk about the Islamic models as well. And the aim of today's talk is not to tell you which product you should take. The aim of today's talk is to arm you with the tools to understand the different products so that you can then make an informed decision, inshallah. A little bit about FIDA. We provide an Islamic home finance product, but we're relatively small in the market. We're relatively new, and we're not here to say you should buy with FIDA, although that's an option if you wish to take it. We're here really to provide a very, very educational discussion, inshallah. So, we're going to probably present for 40 to 45 minutes, and then leave plenty of time for Q&A at the end, inshallah. We've also actually, just before we get into it, we've got a very special person in the room today. Brother Kashif. Where's Brother Kashif? Oh, he's coming back, inshallah. Okay, he's just dropping the kids home. Brother Kashif lives literally down the road from here. He's one of our first ever home buyers, so he's also going to tell you a little bit about his journey as well, inshallah. But we'll do that towards the end, just before Q&A. Okay, so getting straight into it. My name is 𝐸𝐬𝐻. I'm the CEO and founder of FIDA. By background, I'm an actuary. Who here has heard of an actuary before? 1, 2, 3, 4, 5, 6, 7, mashallah. Normally I get about 3 hands in a room. So actuaries are fairly uncommon. There's not many actuaries in the world. It's a fairly uncommon skill set. Actuaries are effectively statistical modelers, so very technical mathematicians. I worked most of my life in the London financial markets, modelling risk for financial institutions. I worked for the likes of PwC. I worked for various managing agencies within the Lloyd's of London marketplace, and then I went to the Bank of England for a while as well. The actuarial skill set, because it's fairly uncommon, but very high in demand amongst financial institutions, actuaries tend to be very handsomely paid. So when I was working in the city, alhamdulillah, I was earning very, very good money. I was in a very senior role. I was in a very high-powered role, and I was very good at what I did, alhamdulillah. And I was very blessed. And so I had no reason to leave. I had no reason ever to leave this role. I was actually very, very happy. But then something changed. And I was, I was working at the Bank of England. This is back in 2015. And I was sat next to a young chap called 𝐸𝐬𝐻, a young non-Muslim, 21-year-old, fresh out of university graduate. And I was having a conversation with Elliot. This is when I was working at the Bank of England. And I was actually boasting to Elliot. And I was saying, Elliot, we actuaries earn a ton of money. And my plan is, by the time I'm 40, I'm going to own a property portfolio, and I'm going to retire off of the rental income. And that was my plan at the time. Alhamdulillah. But this plan wasn't good enough for Elliot. Elliot, when I said this to him, he literally wagged a finger in my face. Right? This is a 21-year-old non-Muslim new graduate from university. He wagged a finger in my face and he said, Reza, what you're talking about is going to deepen the housing crisis we already have. You're going to buy up property stock and make it even more expensive for a young generation like me to get onto the property ladder. Whereas with an actuarial skill set, you have a responsibility to fix it. Elliot did not say you have the ability to fix it. He said you have a responsibility to fix it. Subtle difference. And Elliot's finger wagging struck me like a ton of bricks. And I thought, gosh, he's got a very good point. Elliot, in his own words, was effectively schooling me in Islam. He was saying in his own words, Allah has given you a skill set. You have to use that skill set to do something beneficial. And this is a very Islamic concept. And so this planted the seed in my mind, and I thought, wow, Elliot's got a really good point. And later that same year in 2015, alhamdulillah, Allah called me to his house. I went on Hajj. And you often hear that Hajj is a life-changing experience. And if you haven't been, I would say you can't understand what that means until you go. And Hajj was life-changing for me. It was Hajj that changed my entire outlook on life. So I went on Hajj, performed the rites of Hajj. And I remember standing on the day of Arafah with my hands raised to the sky, having a conversation, saying, Ya Allah, you have given me everything in life. Everything I could possibly ask for, you have given me, without me even asking for it. You have given me my health, my wealth, my iman, my intellect, and this actuarial skill set which very few people on earth possess. So, Ya Allah, what will I say to you on that day when you ask me what I did with it all? And I remember standing on Arafah, it was 50 degrees. The sun was beating down and I was under the shade of a lonely tree. And I remember suddenly there being a puddle around my feet in the sand because I started crying and trembling out of pure fear. I started thinking forward to that day and thinking, what am I going to say to you, Ya Rab? How am I going to stand in front of you? And all I can say, with all the innumerable blessings you've given me, that all I did was buy a nice car and a nice house and went on holidays and very occasionally dipped into my pocket to give in charity. Ya Rabbi, I am ashamed to stand in front of you on that day, and that's all I can say to you. Ya Allah, is that going to be a good enough reason? Is that going to be a good enough answer? And I thought to myself, I don't have a good enough answer. And so I started crying and trembling that day like I've never cried and trembled in my life. And maybe I will never cry and tremble like that again, out of pure fear for that conversation that I'm going to have with Allah on that day. That was the moment on Hajj that changed my entire life, that changed my entire perspective. And so it was that moment when I decided, okay, I wanted to have a better answer. I wanted to be able to say, Ya Rab, I tried. I tried to do something to please you. Maybe I failed. Maybe I failed completely, but at least I tried to please you, Ya Rab. Please, in your infinite mercy, accept it from me. I wanted to be able to say this. And I knew at that point in my life I couldn't even say that. So I came home from Hajj. I ended my very lucrative career at the Bank of England. And I immediately started setting up FIDA, which we're going to talk about a little bit later in the presentation. And so that was my journey, how I went from a very, very well-paid city career to giving it all up to try and do something useful for Allah. To try and be able to say, Ya Rab, I tried. And if there's one thing I want everybody to take away from this talk tonight, I want you to think about that conversation. When Allah asks you, what did you do to please me? What did you do with the innumerable ni'mah I've blessed you with? What did you do with it all? This is a question every single one of us will have to answer. And this is going to become very important later in the conversation. We're going to come back to this point, but I want each of you to start thinking about that. So I came back, I ended my role, and I started thinking, right, what am I going to do to please Allah? And I thought about charity work, and I realized charity wasn't necessarily my calling, and there's plenty of great charities. And then I rewound to this conversation with Elliot, and I thought, okay, the property market, this is where I can potentially make a difference. And so then I started building the product that we have today, which again we'll talk about a bit later. And then I thought, right, okay, I built the product, the structure, I actually drafted the terms, I started designing the tech platform that I wanted to put in place, I built the risk framework, the pricing framework, and I thought, okay, this is all the pieces. But actually, I'm no Sharia scholar. I have no idea if this is even halal or not. I had never picked up an Islamic finance text in my life up until this point. So I didn't know Islamic finance, but I knew finance. And I had common sense. And I used a common sense approach to put the structure together. And then I thought, right, okay, common sense is only going to get me so far. So now I need a Sharia scholar who can review and approve this. And I realized that I needed someone who was both an expert in fiqh, but also an expert in English banking and finance. And I very quickly realized I was looking for a needle in a haystack, because being an expert in fiqh, that's a lifetime pursuit in itself, and being an expert in English banking, law and finance, that's a lifetime pursuit in itself, and I was looking for someone who was an expert in both. So I started asking around my friends, and I said, right, who do you know who can help me with this pursuit? And some people put me in touch with Sharia scholars who didn't understand finance, and some people put me in touch with banking lawyers who didn't understand fiqh. And then a good friend of mine at the Bank of England, who leads their Islamic finance practice even today, he said, you should speak to Sheikh Badr al-Hassan. And I thought, who's this Badr al-Hassan? I've never heard of Badr al-Hassan. And little did I know, this was the gentleman who I knew as Salman Hassan, who had taught me Arabic 10 years earlier. And I didn't realize that he was the needle in a haystack that I was looking for. And so he put us in touch. We got on a phone call, and I'm going to let Sheikh Salman quickly introduce himself before we get into the main presentation, Sheikh.
السلام عليكم ورحمة الله وبركاته. أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. الحمد لله رب العالمين وصلى الله على سيدنا محمد وعلى آله وصحبه أجمعين. My name is Salman Hassan. I'm by training and trade a lawyer, a banking and finance lawyer. Alhamdulillah, Allah blessed me that I never had to practice conventional finance. My background is I graduated in law from the London School of Economics and then trained as a barrister, got called to the bar in 2001, and then I decided I just couldn't go into law because as a trainee barrister we had to draft particulars of claim and other documents, and at the end of it we had to write, and the claimant claims interest at the rate of, and when you're drafting that in simulation as a student, it still fills you with compunction, it fills you with abhorrence. And so I thought, I just need to avoid this trade for a while. And also I was very, very interested in Shari'ah because my father is a Maulana Sahib and he always inspired me, mashallah. He was a polyglot, fluent in 5 languages, graduated from madrasa as a Maulana at the age of 17. So going through ordinary high school, I felt like left out because I just wanted to be like my dad. So I graduated, went off to Syria to study at the time, 2001, long before the war, when Syria and Damascus was a beautiful place, mashallah, still is, inshallah will still be. And I studied Shari'ah out there for several years, came back, and then actually when I used to come back during the summer holidays, I used to come back and teach Arabic in the summer holidays. And in 2005, Raza, as an undergrad, was one of my students. That's where we first met. And so he did my course, and then we parted ways. I then came back from Syria, joined an English law firm, worked here in London, then out in Dubai, serving all the international banks in the Islamic finance practice, all the big names, HSBC, Royal Bank of Scotland, Lloyds, Barclays, they were our clients. Also, a lot of the Islamic regional banks, both in the UK and also in the Middle East, we served all of those. But what I realized very quickly in that practice, actually before that, I want to go back to earlier on in my story. As an undergrad, when I was studying law, I used to go to the Middle East to practice my Arabic, which enabled me after graduating to go into an Arabic medium Sharia program. Alhamdulillah, I was already fluent when I graduated. And on one of those summer holidays, I was out in Jordan, and I'd go to different places, to Egypt, to Jordan, to various other places. And on this summer holiday, I was in Jordan. I remember I met a sheikh there who I studied with for 3 months. And one day we were standing on top of a hill. Amman is a very hilly place. Anybody been to Amman? Jordan? No? You have? It's a beautiful city, isn't it? All the buildings are white. So at night, when all the buildings light up, it looks like each house is like a little lantern, a white lantern. So if you're standing on top of a hill, all you see is these sparkling little lanterns all over, dotted around on this hilly town. We were standing on top of a hill, and I said to him, Sheikh, I want to become an Islamic finance lawyer. And at the age of 19, I had absolutely no idea what that meant. It just sounded really cool. And he looked at me and he said, well, firstly, what he did not say, Salman, can you earn a lot of money? He did not say, can you grow a big reputation? He did not say, can you become famous? He said, can you serve your community with it? He said, تَخْدِمُ النَّاسَ بِهِ. Can you serve your community? And this reiterated for me something my parents had brought me up on. And many of you who are parents and who are children who have parents who brought you up on the same thing, which is the principle of khidmah, which is from the prophetic sunnah, sallallahu alayhi wa sallam. Because the Prophet sallam, he invited to Islam through khidmah. And so my sheikh used to say to me, Man lam yakhdim yandam. Whoever does not serve regrets. And so what that planted in me was the amplification of that principle, that whatever I do in my life should be a khidmah for the community. It's not just about having a career or earning money. And this reiterates Raza's journey. It's about looking for that opportunity, that calling, that purpose that Allah has given each and every one of us. Because we all start off with a starter pack. We're born with a certain set of skills. In the Quran, it's called shakila. كُلُّ يَعْمَلُ عَلَى شَاكِلَتِهِ. Allah says, each person acts and serves according to their personality. Shakila means your personality, what you're just naturally good at. Some people are naturally good at trade. Some people are naturally good at sports. Some people are, each person has something they're good at. And we don't undermine or belittle any of those. Each person serves with what Allah has given them. And now, if we think about it like that, then we think about, right, what has Allah created my purpose for? Because that's the journey that Raza and I were both on, and how Allah brought us together. And so now, fast forward, I'm working in an English law firm. I'm sitting out in Dubai, and I was very uncomfortable with what I was doing, because even though it was Islamic finance, the banks would come to us, and the mandate they'd give to us is, here is an interest-bearing product, like mortgage, for example. Can you structure for us an Islamic equivalent that produces exactly the same financial outcome as an interest-bearing mortgage, but using Islamic principles or contracts? Right now, if you're a person who, whether or not you're a scholar, in fact, if you're any person with a conscience who has iman, would you be comfortable with that? That you're helping people not to implement the Shari'ah as it should be, but to circumvent it and get around it? How do you feel about that? What sort of words come to your mind? Hypocrisy? Strong words. Anything else? Say again? Fake. Okay, yeah. So lack of authenticity, being fake. Misleading. Good. So misleading is deceiving people. Yeah. Anything else? Disgusted. Yes, good. So all of those words, I was filled with all of those. But I carried on for several years because I'd spoken to my teachers even before going in. And I said, look, it's a dicey business. It's not genuine really. Should I go into it? And what they said to me is, you should go in to learn. Learn the trade, learn how the banking system works, learn how the financial system works. Arm yourself with the skill sets and the experience and expertise, and then leave and then try to establish something that's more genuine and authentic and that serves the needs of the community. So that was the mission with which I was sent into that industry. And so several years later, one day I did istikhara, and I got a very clear meaning that my time is up here, my mission is complete, I need to leave. And Allah inspired me to resign the same day. And the next morning, I got a call from my boss, and he offered to double my salary. And Allah had already prepared me, because I knew that's going to happen. And Allah prepared me to say no, because when you're serving a higher purpose, then money doesn't actually matter anymore, alhamdulillah. And so I left the law firm, came back to the UK, and I started just doing consulting. And interestingly, I was actually doing a bit of consulting who else? The Bank of England. So I was doing a bit of work for the Bank of England, because they were setting up a sort of a liquidity facility enabling Islamic banks in the UK to post liquidity with the Bank of England. They didn't have such a facility in the past. So I did a bit of consulting work for them, and I was working with a guy called Arshad, who also knew Raza, and that's how he introduced us. And I can still remember that fateful day when Raza called me. I was actually sitting in the Cayman Islands, of all places. I was doing like a 6-month consultancy piece out there on a court case. And I was sitting on this paradise island. They gave me like a two-bed beach villa. And I said to them, I don't need 2 bedrooms. They said, don't worry, it's too much hassle to change it. Right? So there was just so much money sloshing around there. And it's at a time when I was earning the most money in my life after I left the law firm. And Raza called me and said, I've left my job at the Bank of England. I'd like to do this. I'd like to really solve the housing problem for the Muslim community. Would you like to help me? Would you like to join this journey? And I said, that's my dream. I literally fell off my chair. And I said, I'd love to do this. I'm on this paradise island, earning no man's money. It's inconceivable for somebody that age to earn that much money. And I just said, I'd love to do this. And so we made that decision. And that decision meant that for a while we didn't actually earn so much money. We had to wind down our consultancy business. But again, and I say this to many people, is if you see the purpose for which Allah has created you, then actually money doesn't matter anymore, and money will come around. It's like your shadow; it will follow you. But if you chase it, you'll never catch it. Yeah. Anyway, so I don't want to spend too much time on ourselves. What I want to do is just reiterate that fa'idah, which means benefit, and that's the sort of secret behind the name, is really an answer to that call to serve the community. It's about khidmah. Now, Yeah, all right. So just very quickly what the agenda is for today. Our purpose here today is to raise awareness. So we're here to inform you with the information and knowledge for you to make your own informed decisions. We're not here to tell you what to do. It's more so that you understand how the different products work so that you can make your own informed decisions and to explore the different options. And we're also rather going to drill down into detail on the pros and cons of the different options available. What I'm going to do before that is I often get asked, as a layperson, what principles should I be aware of? What Shari'ah principles should I be aware of in order to help me identify what you might call red flags within a financial product? Because the ordinary person isn't really able to look under the bonnet and tinker around and understand what's going on. Unless you're a car mechanic, you're not going to be able to open the bonnet and understand what's going on. Right? So in terms of financial products, I'm a bit like a mechanic. And that's what we do. We put the engines together and we also are able to lift the bonnet and look underneath and understand what's going on. So I'm going to give you a bit of insight into how different financial products are structured and what Sharia principles guide them. Okay? But before that, I'm going to focus on 3 key Sharia principles. The first one is that risk should be, I'm going to phrase it slightly differently, reward should be linked to the risk taken. So reward from an investment should be linked to the risk of that investment. This is based on a hadith of the Prophet sallallahu alaihi wasallam, in which he says, "Al-kharaju bid-daman." Any Arabic speakers here? Anybody speak Arabic? All right. Okay. Or anybody studying Arabic? Okay. Kharaj. What does kharaj mean? From kharaja. Any of you heard it? To exit. Yeah. So kharaj here is the profit or the return that you get from the investment. That's called kharaj. What you extract out, what you get back. Okay. The word bi means with, like Bismillah, with the name of Allah. All right. So al-kharaju bid-daman. Daman. What does daman mean? A guarantee. Good. Guarantee here means the person who is at risk of losing that money. Yeah. So the person who guarantees is the person taking the risk. Does that make sense? Yeah. So the Prophet ﷺ says the reward or the profit that you get from an investment must be connected, is on the basis of the risk that you took in that investment. Now, if you do the opposite of that logic, it means that if you didn't take a risk in that investment, should you be entitled to a return? No, that's really important. Very, very important principle. This is a fundamental, non-negotiable principle of the Sharia. This is principle number 1. If that's not there, it's very difficult to make that investment halal. It's very, very difficult. In fact, impossible. It's non-negotiable. Okay? So, let me give you an example. If I invest in a factory, and what's the risk of the factory? What sort of things can happen? What could go wrong? Okay, so I might make widgets and then nobody buys them. Yeah, that's commercial risk, business risk. Somebody might not buy the product. What else could happen? Fire, so some sort of accident, flood. So natural risks, business risks. Yeah, this is the risks that are referred to with the word daman. Okay, so you have to take those risks. Now there is another type of risk which we call credit risk. Because sometimes some people say, why can't I charge interest? Because if I lend somebody money, if I've given somebody a loan, there's a risk that they might not pay me back. So is the lender taking some risk? Yeah. So suppose a bank lends somebody money, lends the factory owner money. Okay. So the bank lends the factory owner £100,000. The factory owner invests that in his factory. Right. So the bank is taking what you call credit risk, the risk that the factory owner can't or won't pay back, and the factory owner is taking business risk. Is the bank taking business risk? Not directly, because if something happens to the factory or they can't sell the product, do they still owe the money back to the bank? Yeah, this is key. So in a loan or a debt, the money is owed back from your person, not from the business. Does that make sense? Yeah, it's a liability It's a daman on the individual borrower. It's not connected to the business. Whereas the Shari'ah says that if you want to take something back for your money, you have to take the business risk, not just the credit risk. Because if you charge for credit risk, if I lend somebody money £100 and I say in a year's time you have to give me 110 back, so my kharaj is £10, I'm trying to take something back for it on top of the capital amount. I'm not taking any business risk, I'm taking credit risk in you. Is that allowed? What do we call that? Interest, or in Arabic we call it? Riba. It's very clear, right? So we know the difference between business risk and credit risk, because that's the difference that determines whether something would be ribawi or not. Whether or not there's a debt or a liability to repay that money attaching to the liability of the individual, the person, not the activity. If the money is risked in the activity, if it attaches to the activity, then it's daman of the activity and risk of loss of the activity. Does that make sense to everybody? Yeah? Clear? Okay. So this is called al-kharaju bil-daman. So if you see an investment opportunity which says to you that your capital is guaranteed back, and on top of that we'll give you a bit extra, is that a red flag? Yes, good. All right, you're all listening. All right, okay. The next principle is the difference between rent and riba. Difference between rent and riba. Good. Okay, so if I buy a house and then I rent that out to somebody and they give me a rental income, is that rent or riba? It's very clear. Is that jaiz? Is that allowed? Yes. Okay. If I lend somebody money and they have to pay me that money back in a year's time and something on top, is that rent or riba? Riba. Very clear distinction. Okay? Now I'm going to give you a scenario where it looks a bit more blurred. Alright? So pay attention. Right, let's see if the youngsters get it. Okay? Now, suppose you need a house. And simple example, the house is £100,000 and you've only got £20,000. So you need another £80,000. Okay? You walk into the high street bank, HSBC, Barclays, Lloyds, NatWest, whatever, and you say, I need to buy a house, I've got 20,000, I need another 80,000, can you help me? And they say, yeah, we can lend that to you and we'll charge you interest on that. Are you okay with that? And you say, no, that's not consistent with my faith, so you leave. And then you walk into an Islamic mortgage provider. Okay? In England, those are called home purchase plans, HPP. Some of you may have one of those. Okay? So the traditional providers of that were 𝐅𝐢𝐧𝐚𝐥 Bank. Now we have Gatehouse, Stride Up, and also Offer, and there's one or two others. Okay? Now, before I explain how this works, I want to make very clear that my intention here is to explain to you how it works, not to pass judgment. I'm not here to tell you this is right or wrong, or this is halal or haram, but just to inform you so that you can make your own informed decisions and so that the products are transparent to you. Because a lot of people come to us and say, I don't really understand this, or they misunderstand it. And it's really important that if you're going to get into a product or a contract, that you fully understand it. That's our purpose. And I'm going to explain to you in a bit why we don't pass judgment, because there are well-known, reputable Sharia scholars who approve these products, and there are others who also have reservations about them. And I'm going to go into why some approve and some have reservations. I'm going to go into that as well. Again, without passing judgment. We love all of our scholars, and we're not here to question any of their sincerity. We're here to just understand how the products work. Is that clear? Yeah? If you have any strong feelings about those, that's also fine, so long as it doesn't break our unity. Because unity is wajib in our deen. Unity among our brotherhood is wajib. Whereas those differences are differences in fiqh and understanding. And it's not wajib to have unity in fiqh and understanding all the time. The history of Islam is littered with disagreements in fiqh. That's fine. But if we are divided in our hearts, this is haram. Right? So, I'm going to explain to you how the product works. So you need £100,000. You need £80,000. The house costs £100,000. You have £20,000. You need another £80,000. So you walk into a home purchase plan provider, an Islamic mortgage provider. and they say to you, well, we can't lend you the money and charge you more because that would be interest or riba, but we could enter into a co-ownership, what we call a musharaka or a sharika. The traditional word for this was sharika. Sharika, many of you will recognize the word shirk. What does shirk mean? Associating partners. Okay, so in a business context, your business partner is called your sharik. So we say, La sharika lahu. Allah has no partner. He has no business partner, right? He's one. Wahidun ahad. Okay, we have partners. We have a sharik. Okay, so this is called a sharika or a musharaka. So they'll say, we'll buy the house together in a co-ownership. We put in 80,000, you put in 20,000. On day one, we are 80-20 partners. Very simple, right? In fact, a musharaka is a very noble contract. It's a contract where people get together to share the risk of an activity and then to share the reward. Okay? So in a musharaka, the principle of al-kharaj bil-daman is established, isn't it? Because if two people buy a house together and something happens to the house, right? Each of you is liable to lose your money according to your share. Right? So suppose you buy that house on day one and then something happens to the house and there's a total loss. God forbid. It's very unlikely, but it's possible. Who loses their £80,000? The bank. Who loses their £20,000? You. Right? So this is true to the principle of al-kharaj bil-daman. Okay, so far so good. The next thing the bank will do, they will say, you must buy our share off of us for exactly £80,000. Okay, so they, through a term of that contract, they sell you their share for £80,000. Now you say, well, if I had the £80,000, I wouldn't need you. Yeah, you wouldn't be there, would you? You just buy it with cash. So the only way they can do this is if they give you what we call credit. Yeah, they give you the opportunity to pay that in installments over time. So they'll give you 20, 25, 30 years. You pay monthly installments to buy their share. But have they already sold it to you? Yeah, let me give you an example. If I have a car and I sell it to Bilal, I say, Bilal, would you like to buy my car? £10,000. He says yes. But he says, can I pay you in a year's time? I say, fine, take the car, pay me in a year's time. Who owns the car? Who has dhaman of the car now? He does. Do I have any dhaman? Can you come back to me next week and say, I had a car crash, you need to pay me? No, he can't, right? He's the owner, he takes liability for the car. So dhaman is liability. What does he owe me? He owes me money. He owes me a money debt. It crystallizes a debt between me and him. I've given him credit, which is the chance to pay later. Is that clear? Okay? So now when the bank sells you their share, they've passed on all the risk. Where is the risk now? The buyer. Is the bank taking any more risk? Right. So is now the principle of sharika or musharaka still there when they sold you their share? They've reversed it. On the same day, they've entered into a partnership, taken risk, but then reversed it straight away by selling you their share on credit. Does that make sense? Okay? Now again, so far so good. If that were the end of it, you'd be a happy bunny. Because now you've got 20 years to pay them their £80,000. It's like an interest-free loan. Yeah? Who would like that contract? You'd love it. It'd be amazing. But wow, this is charity. Yeah? So what's the catch? The catch is this. So before we get there, firstly, they've created a debt. It's very, very important now. So what type of risk is the bank taking? Are they taking business risk in the house or credit risk? Does credit risk allow you to take anything back? Can I take more? If I lend you £100 credit risk, can I expect 110 back in a year's time? We said no, remember? Because on a loan you don't take any more back because that's interest, right? So now, in a roundabout way, can you see, instead of lending you the money and creating the credit risk or the debt, they've done it in two steps. They've created a partnership and then sold you their share of the partnership to create the credit risk. Does that make sense? Is everybody clear that the relationship between you and the bank now is one of debt and credit? Yeah. Okay, now, they stack on top of this another contract. So there's 3 contracts in this one transaction. The third contract, they say, is until you've paid off that £80,000, you have to rent our share and pay us monthly rent. It's a bit like me saying to Bilal, I sell you my car for £10,000, and he owes me £10,000 in a year's time. And I say, but until you pay me the £10,000, you have to pay me rent each month. Does that make any sense? No. Because I don't own the car anymore. He owns the car. How can I charge him rent on a car he owns? There's a existential conundrum, isn't it? You're scratching your heads with me like you're tearing my hair out. How does this make any sense? You see? So what's happening here is they're kind of charging you rent. Okay, let's say there's a lease and they're charging you rent, but I want you to just speak from your fitrah, from your natural state. Are they charging you rent on their share of the house, or are they charging you rent on the money you owe them? So the kids are speaking, mashallah. Right? Mashallah, well done, right? The reality, the substance of it, if you just sort of apply your mind to it or your heart to it, is they're actually not charging you rent on their share of the property because they don't have a share. They sold it to you. And they passed on all the risk onto you. Yeah? And that's why some scholars, or many scholars, object to this, because what they say is, in reality, through this roundabout way, they're charging rent on the money. What do you call rent on money? It's just another way of charging interest, right? Now, I'm not necessarily saying that it is interest or it is riba. I'm just saying that's the way some scholars think about this transaction. There are other scholars who have allowed it, and by and large, their reasoning for allowing it is that sometimes, and again, I don't necessarily agree or disagree with them, but they have a rationale. Sometimes you have to make certain dispensations. In Arabic, we call this rukhsa. You have to allow certain things in order to enable people in a very hostile, legal, regulatory, commercial environment to grow roots and establish financial institutions. To enable Islamic banks to establish themselves, the scholars chose to give them certain temporary allowances with the mandate that as soon as possible you have to move away from these practices to practices that are more authentic. Right? And so that's really where we see ourselves, that Faida has come along and made a difference, and Raz is going to drill down and explain the differences. So that's the second principle. Can you see how in some contracts what looks like rent could fall foul of some of the principles of riba, where a debt is created? That's the second red flag. Where there's a debt and then there's a return stacked on top of that debt, no matter how you arrive there, then you have the red flag that this could be ribawi. And as a scholar, when people bring contracts to me, that's what I look for. Is there a debt liability in the contract? Yeah, because if I can rummage around, open the bonnet, look for the debt, there's a debt there. Now the rules of riba are going to apply because there's a credit relationship. Does that make sense? Yeah? Okay. Now, the final principle is, you may be wondering, well, how can you do this so easily? You have a partnership contract, then you have a sale, and then you have a lease. Is it so easy to circumvent the Shari'ah? And the answer to this is, of course, not. And those of us who are passionate about Islamic law know that Islamic law is not full of holes. Would our Lord give us a legal system that can so easily be manipulated? Do you think so? No. Alright? And this goes back to another hadith in which it is said, Naha Rasulullah sallallahu alayhi wa sallam an bay'atayn fi bay'ah. The Prophet ﷺ forbade the combination of two contracts of sale in one transaction. And the scholars, when they explain this, they say that the meaning of this is the combination of two contracts of sale in order to synthesize or replicate a ribawi outcome. So if you look at this example I gave you, there's three contracts. The first contract is the contract of partnership, where two people get together, pool their money together to buy something from a third party. Okay? So they buy the house from the seller. The seller could be Mr. Joe Bloggs, right? But the two people, the bank and the customer, they've come together in a partnership. Now, there's no sale between the bank and the customer here. They're just pooling money together. Does that make sense? Yeah. So that's not a contract of exchange. It's not a bay'ah. The second contract is where the bank sells the customer their share. Is that a sale? Yes, that's called a bay'ah. It's a contract of exchange, right? Property for money. The third contract is a lease contract. It's a contract exchanging use of a property for money, for rent. Is that a contract of exchange? Yes. So can you see the second two contracts, the sale of their share and the lease are bay'ah. They're contracts of exchange. And together they bay'atayn fi bay'ah, two contracts of exchange in one transaction where they're interlinked. And the scholars have said that the reason why this is forbidden in the hadith is because two contracts of sale in one can be used to replicate the effect of riba. Okay, and that's quite a complex example. I could give you a much simpler example. Would you like me to do this? Right. So I'm going to need a rabbit and a hat. No, I'm joking. Right. It's going to appear like magic. Right? Some of you may like, what happened there? Okay. So I can do it in slow motion afterwards, right? But let me take you through this. Okay. So right, I'm going to need one of these. Okay. So it's going to be a bottle of water. Okay. All right. So suppose you need a loan. You need some money. You need £100. So you walk into an Islamic bank and they say, well, we can't lend you £100 and charge you for it, but we have a bottle of water. Can I have a volunteer? Young man, were you the one who answered the question earlier? MashaAllah, come up here. What's your name?
Rakan.
Huh?
Rakan.
MashaAllah. All right, okay. So you need £100, right? And I'm the bank.
Yeah.
What are you going to do with your £100?
I need to spend it in like anything like rent.
MashaAllah, this young man is thinking about moving out already. What are you feeding him? MashaAllah. All right. Okay. So Rakan needs to pay rent. Okay. So he needs £100. Okay. I'm not going to lend it to him because then I can't charge him anything. But I'm going to sell him my bottle, and I'm going to sell this to him for £110 credit, which means he's going to owe me £110 in a year's time. Does that make sense?
Yeah.
Yeah. Are you sure you want to get into this?
Yeah.
All right. Yeah, that's warning you. Here we go. So you take the bottle. Now, what does he owe me? 110. That's one sale. Now he's going to sell that back to me immediately. Here we go. For £100 cash. There you go. Happy? All right. So the outcome is he has £100 cash, which he can pay the rent with now, and he owes me £110 in a year's time. Can you see what you can do if you combine two sales immediately? You can replicate the effect of riba. Now, would you believe me if I said to you that 90%, if not 99%, of all Islamic banking financial transactions globally is this? They just create cash flows by selling bottles of oil or barrels of oil or rice or metals or different commodities, which are not really true sales, are they? They're just ways of rotating a commodity to create a cash flow. Anybody thought that looked like magic? Would you like me to do it again? Can I show you again? Or did you get it? Yeah, don't try this on your own at home. Not to be tried at home. Alright, Jazakumullah khairan. May Allah bless you. Alright, so again, that just shows how, if somebody's intention is to circumvent the Shari'ah, to get around the Shari'ah, and to do what our Creator intended us not to do, then it's possible, because using this, as a financial engineer, that's basically what we are as lawyers. I could use this mechanism to give you an Islamic quote-unquote equivalent of any financial product in the world. I could do it. Which means nothing is forbidden anymore. Do you see the ramifications of that? It means nothing that Rabbuna Ta'ala, Allah has made haram in terms of financial transactions is haram anymore. You could do anything. So if you allow this, you could potentially do anything. It's very, very dangerous. And so that's why many scholars are extremely alarmed by these practices and why they're speaking out against it and why they're calling for authenticity, a return to the basis and the principles of Sharia. And it's really that, the word here was disgust. It's really that sort of feeling that both Radha and I had when we established FIDA, and we thought we have to show the world that a true alternative is possible. Maybe other people will take vision from what we do and then take this further, because every generation bridges for the next generation. But we have to start something, we have to plant a seed and to show people by growing it that it's possible. And alhamdulillah, this is where we are today. I'm going to let Raza drill down into detail of all the various different financial products available to Muslims in terms of house buying. But I hope that's been useful. Again, I'd like to reiterate, we're not passing judgment on anybody. We're simply arming you with information so that you can make your own informed decision. Jazakumullah khairan.
Jazakumullah khairan, Sheikh. So now you have all been armed with the basic principles of Islamic finance, the basic fiqh principles. So now I'm going to test you all. Okay? It's not a difficult test, don't worry. You're all going to pass, inshallah. But the point of this test is really to explore your fitrah and understand that your fitrah already knows what is right and what is wrong. You'll be surprised. You already know everything we're telling you today. You just don't realize that you know it. So, I'm going to ask you the same questions that Sheikh Salman asked earlier on. If you are renting a property from a landlord and you're paying rent to your landlord, is that rent or riba? Rent. You all know this. You automatically know this. If you are borrowing money from a bank and paying a return on that money that you've borrowed, is that rent or riba? Great. Now this is the harder question. This is where we check if you've been paying attention. You know the first one is rent. You know the second one is riba. You already know this. Your heart knows this, your fitrah knows this. How do you know? How do you know which one is rent and which one is riba? How is it that when you're renting a property from your landlord, you sleep comfortably at night? You know, you're content in your heart. You know this is rent. You have nothing to worry about. And how is it that your heart already knows that when you borrow money from a bank and pay a return on that money, this is riba? What's the difference between the two? How do you know automatically which one you're comfortable with? What's the difference?
In the first case, the house is with us, but all the risk is to the landlord. Whereas when we borrow from bank, all the risk.
Excellent. Round of applause for the brother here, mashallah. It all comes down to risk. Al-kharaju bid-daman, the three words that our Prophet ﷺ said in such a profound statement that sums up Islamic finance in three small words. When you're renting from a landlord, if anything happens to that property, whose headache is it? Yours or the landlord's? The landlord's. He's taking risk in the asset, correct? If he is taking risk in the asset, is he entitled to take a return? Yes. This is al-kharaju bid-daman. When you are borrowing money from a bank and you use that money to buy a property, you now own the property. If anything happens to that property, whose headache is it? Yours or the bank's? Yours. Is the bank taking risk in the asset? No. So if the bank is not taking risk in the asset, is it entitled to take a return? No. This is riba. Al-kharaju bid-daman. That is it. That is Islamic finance in a nutshell. You know everything you need to know now. As long as you understand this, in any contract you look at, who takes the risk, who takes the reward? That's all you need to understand. And that is how you know if a contract is halal or not. That is how your fitrah knows, automatically, if it is comfortable or not. That is why when you're renting from a landlord, your fitrah knows. Your landlord is taking the risk, therefore he deserves a return. You know this, you just don't realize you know. Okay. Now, as long as you understand those principles, you almost don't even need to listen to the rest of the presentation. Sheikh Salman has done a very good job, mashallah. But I'm going to take you through it. We're going to drill down into some of the actual products and help you understand some of the details of those products, inshallah. So, we're going to start very simple with a traditional mortgage. And most of you already know how a traditional mortgage works. And actually, you don't even need to pay attention to the words of the screen. A traditional mortgage is very simple. The bank lends you money. You take the money. Sheikh Salman is the bank, so I'm going to take money from Sheikh Salman. Bilal is selling his property. I'm going to give the money to Bilal. I now own the property, and I owe the money back to the bank with interest on top. We all know how a mortgage works. And this is very clearly a loan with interest. This is very clearly riba. Okay, so we're going to get into some of the pros and cons and things to look out for with a mortgage. Well, There are some benefits to a conventional mortgage, even though, as we all know, this is clearly a riba-based contract. Some of the benefits, there are lots of providers, lots and lots of providers, so you have lots of choice. And where you have lots of choice, lots of competition, you can shop around and get a good price. And we all know who the providers are as well, the banks, the building societies. They are also fully regulated by the Financial Conduct Authority. Who can tell me, why does a mortgage need to be regulated? Why are bank mortgages regulated? Who can tell me? It's debt, okay. Yeah. Anyone else? Any other thoughts?
Maintain the risk.
Maintain the risk, okay. Who here knows what the word mortgage means? Who said it? Death grip. You all know the word mort. Mort means death. The word mortgage, it comes from French and Latin. It means death grip or death pledge. Subhanallah. It's a very sinister word. This is what's being sold to people, a death grip. Why is it called a death grip? Because you are taking out a debt, a loan, worth hundreds of thousands of pounds that is going to follow you to the grave until you pay it back. And what happens if you take out this loan from the bank and you pass away? What happens to the debt? Does it disappear? No. Where does it go? Next of kin. So it actually follows you beyond the grave. Because if you don't pay it back, it follows to your family and then they have to pay it back. This is why it's called a death grip or a death pledge. Now, if you are taking out a debt worth hundreds of thousands of pounds that is going to follow you to the grave and potentially follow your family, if that product is not the right product for you, and if it's mismanaged, do you think there's a chance it could ruin lives? Very strong chance it could ruin lives. And by the way, it does. There's a UK charity called Step Change, and they recently did some research and they concluded that problem debt costs the UK economy over £8 billion per annum. This is the cost of people who can't keep up with mortgage and other types of debt payments, the cost of people losing their jobs, having mental health breakdowns, having family breakdowns, marriage breakdowns. This is the combined cost of problem debt in the UK. And they concluded that almost 1/4 of homelessness on the UK streets is caused by problem debt, people who can't keep up with their mortgage payments. Now, if it has such a heavy societal cost, this is why it needs to be regulated, because it can and very often does ruin lives. This is why debt must be regulated, to make sure that it is not mismanaged and to make sure that if someone is taking out this contract, it's the right contract for them. It's not being missold. Okay, bear that in mind. Okay, some of the cons, some of the negatives of a conventional mortgage. Well, it's a debt-based contract, and as Sheikh Salman mentioned, that was one of the flags Sheikh Salman mentioned. If you have a debt-based contract, you owe a sum of money, and you have to pay money on top of that. What is that called? Riba. That is the very definition of riba. Generally, they're very inflexible. So if you have a mortgage with Barclays, for example, and your monthly payment is £1,000 per month, and you've got a 30-year mortgage, during that period, is it quite possible your income might increase over a 30-year period? Okay. So maybe you get promoted. Now you can afford to pay £1,200 per month. You want to increase your payment by 20%. Can you do that with a mortgage? No, not really. You might be able to pay a little bit extra, but if you want to increase your payments by 20%, they don't let you do it. They whack you with early repayment charges. Okay? If you want to do that, actually, you have to go back to the mortgage provider and apply for a brand new product. You have to go through the time, the cost, the headache, the commitment of applying for a brand new mortgage contract. So they're generally quite inflexible, and the reason being they are debt-based. So the bank wants to make a certain amount of money off of you over a certain period of time. So as a result of that, they're fairly inflexible. And as I mentioned, you get paid early and late repayment penalty fees. Okay, we've gone through some of the providers. Ownership profile. This chart is going to become quite interesting as we explore some of the other models on the market. So with the bank mortgage, As I mentioned, I've paid my money to Brother Bilal. I now own the property. So my name is on the title deed, correct? Okay. So I have 100% ownership of the property on day one, correct? Do I have first right over that property? No. Excellent. Who has first right over the property? The lender. Right. So even though my name is on the title deed, I am the 100% owner of this property, I don't have first right to it. So does the fact that my name is on the title deed make any difference? Does it matter? No. Don't be fooled by whose name is on the title deed. What really matters is the contract. And again, we're going to see this as we get into some of the other products. Okay, I'm not going to dwell too long on a traditional mortgage because we're all fairly familiar with how traditional mortgages work. Now it gets a bit more interesting. Now we're going to talk about Islamic Bank mortgages. Now, with an Islamic Bank mortgage, as Sheikh Salman mentioned, rather than lending you the money, the bank buys that property with you as partners. Okay? And then the bank says, you must now buy our share from us for a fixed price over a fixed period of time and pay rent on top of that. Now, in a partnership, and again, I say this to just highlight some of the areas of contention between Sharia scholars. And we're also going to cover, again, the rationale for approving contracts such as these, and why some of that difference of opinion exists. Right. In a partnership, let's say Brother Bilal and I'm picking on Bilal, I'm so sorry. Brother Bilal and I buy a car together. Okay? I haven't loaned any money to you, you haven't loaned any money to me. We are partners in this car. Okay? Can I say to Bilal, we're partners in this car, but now you have to buy my share from me. You must buy it from me. And if you don't buy it from me, you're a very naughty person. Can I say that to Bilal? No, that's not a partnership. Can I say to Bilal, Bilal, would you like to buy my share from me? Absolutely. This is offer and acceptance. But I cannot force Bilal to buy my share from me because this is not a partnership. In a partnership, we both own the car together. Let's take another example. Let's say we own this car together and a vandal comes and sets this car on fire. The car is utterly destroyed. There's just a hollow, burnt-out shell left. Can I say to Bilal, Bilal, we both own this car as partners, but the car's been destroyed, so now you have to buy my share from me? What will you say? You'll say, what car? I don't want to buy your hollow shell of a car from you. Correct? I can't do this. This is not a partnership. In a partnership, if the car is destroyed, who takes the loss? Both of you. This is a partnership. A partnership relies on sharing the risk. Okay, so one of the areas of contention in Islamic mortgages is that the bank in this partnership will force Bilal to buy their share of the property from them. And there will be a clause in the contract saying if the property is destroyed, you must immediately buy our entire share from us. So this is starting to move away from a partnership, right? It's starting to look a bit more like a debt. So that's one of the areas of contention, and I'll go through some of the others on the next slide. Okay, some of the benefits of Islamic Bank mortgages. They are approved by very reputable Sharia scholars who we have nothing but respect for. Okay? And these are renowned scholars, well-known scholars. They're not backstreet scholars. They are very reputable scholars. So who can tell me, given we've just explored some of the areas of contention, some of the grey areas, some of the red flags with Islamic Bank mortgages, who can tell me why do these Sharia scholars approve these products despite there being clear areas of greyness in them? Who can tell me? What's the rationale?
As you told that in order to establish this market.
Yeah, to establish the market. Let's reframe the question. What would happen if they didn't approve these products?
People might go to conventional mortgages.
People might go to conventional mortgages, or might stop buying homes altogether. So if there are no halal routes for Muslims to buy homes, Muslim home ownership will decline. Muslims will stop buying homes. Now there are plenty of stats that demonstrate the correlation between home ownership and wealth, the correlation between home ownership and educational outcomes, the correlation between home ownership and job outcomes. The correlation between home ownership and standing in society. Plenty of stats showing this correlation. So if Muslim home ownership starts declining, Muslim wealth will decline. Muslim outcomes will decline. Muslim standing in society will decline. And so there is a rationale in Shari'ah of the greater evil, right? The greater evil of Muslim wealth and education and prospects and standing declining outweighs the imperfections in the products. And that is why, even though the products, even the Sharia scholars who approve them say these are not perfect, right? There is room for improvement. But even these Sharia scholars, they approve them on the basis that Muslims need a route to buy homes. It's very important. And so we must never, brothers and sisters, we must never say, because it is not the absolute perfect product, it is haram. We must never say this. No. If a very reputable Sharia scholar has approved it, that makes it halal. This is a mercy upon us from Allah. Okay? And difference of opinion is a mercy upon us from Allah. Because if two sincere, reputable, well-studied Sharia scholars say completely opposite things, which one is correct? Both of them. Subhanallah. Two polar opposite things can both be correct. This is a mercy upon us from Allah. So, we must be very, very considerate. Even if we understand that these products are not perfect, we must not fall into the trap of saying, no, this is haram. No, that's not the case. They are approved by reputable Sharia scholars. Now, they are also regulated and well established. Who can tell me why they're regulated? We covered this on the last slide. Why are Islamic Bank mortgages regulated? It's still a debt-based product, right? It's still a debt-based product. You still owe that money over a set period of time, worth hundreds of thousands of pounds. If not managed correctly, it can and does ruin lives. So, some of the cons, some of the negatives to be aware of, they are debt-based products. And if they are, they look like debt, they operate like debt, they are also priced like debt. The rent is benchmarked against interest rates. So it looks and operates and is priced like debt. And so these are the areas of contention amongst the Sharia scholars. There is no material risk sharing, as we explained earlier. If the property is destroyed, there is a clause stipulating you must immediately buy the bank's share from them. The rent is benchmarked to interest rates. And this point here is very, very important. The Islamic Bank mortgages in the country, the main ones are 𝐼𝐢𝐧𝐚 Bank and 𝐵𝐻𝐻𝑜USE Bank. Okay, I'm talking about banks, Islamic banks. The main ones are 𝐼𝐢𝐧𝐚 Bank and 𝐵𝐻𝐻𝑜USE Bank. The people running these banks, do you think they look like you and I? Mm-mm. These so-called Islamic banks are run by people who do not look like you and I. They do not share the same beliefs as you and I. And believe me, they do not care about you and I. And I know this. Because I've seen with my own eyes these people laughing at our beliefs. I've seen it with my own eyes. These people do not buy the very products that they are selling because they do not believe in them. And these people do not care about outcomes for Muslims. I'm talking about Islamic banks. So the Islamic banks, 𝐼𝐢𝐧𝐚, 𝐵𝐻𝐻𝑜USE Bank, this is the one slide where I will give an opinion. My opinion is if they do not look and believe in the same things as us, and they do not care about us, and they laugh at us, and they will not buy the very product they are selling, I don't believe we should be supporting them. That is the one opinion I'll express. Okay, and I'm going to get into other providers who provide similar products in just a minute. Ownership profile. This is a very interesting one. So, with an Islamic Bank mortgage, on day one, the ownership goes in the bank's name. And right at the end, when you've made the very last payment, that's when the ownership transfers into your name. Are your rights any different under your property? Are your rights in your property any different than with a mortgage, conventional mortgage? No, exactly the same. Even though your name isn't even on the title deed. The bank's name is. So whose name is on the title deed is irrelevant. Don't be fooled. What matters is the contract. The bank has the same right over your property as the conventional name. You have the same right to live in the property and enjoy your property as a conventional bank. Your rights are identical. Even though whose name is on the title deed is the opposite way around. Don't be fooled by whose name is on the title deed. Right. I've talked about Islamic banks and I've expressed an opinion. It is my opinion. You may choose to disagree with me. But I have expressed an opinion on the Islamic banks that operate in the UK today. I also want to highlight non-bank Islamic home purchase plan providers. Now, these providers, the likes of Strider, the likes of Offer, they provide the same product as the Islamic banks. But this is crucially important. Look at the pros and cons. The one thing that I've changed is deep vision alignment. Okay? So you have non-bank providers. They're smaller than the banks. They can't perhaps compete as much as the banks. But they are run by people who look like you and me, who believe in what you and me believe, who care about you and me, and who have the same vision as you and me. They are run by sincere brothers. Especially Offer. Offer is run by the team that originally set up the Islamic Bank of Britain, which was the first bank to provide for bank accounts for Muslim charities when no other bank was doing it. It's the same team. So, run by very sincere brothers. If you are going to go for an Islamic bank mortgage or an Islamic home purchase plan as they're called, my sincere advice, my opinion, which you may choose to disagree with, even though the non-bank providers might be slightly more expensive, I would recommend support these brothers because they actually care about you. Whereas the Islamic banks, they don't. Wallahi, they don't. That's the one opinion I've expressed in this slide deck. And by the way, these guys, they have the sincerity, they have the same vision. And they, when you speak to them, and I speak to them and I know them well and I'm friendly with them, alhamdulillah. When I speak to them, they say, look, you can approach this issue from two ways. You can either start with a very, very pure model, which is what we've decided to do, and then try and scale it, and it's harder to scale it. Because the current economic environment is not designed for that model. The current economic environment and all the legislation and laws and tax rules, it's all designed to favour debt. So if you start with that route, you go slower. Whereas if we start with this route, the debt-based route, we can grow quicker and then we can gradually introduce more purity into our products, right? And gradually improve the products once we get to that scale. That's the rationale. And it's a fair way of looking at things, although it's not the approach we subscribe to. But this is if you're choosing a halal, an Islamic mortgage or an Islamic home purchase plan, our recommendation is support the non-bank providers, inshallah. Okay. Shared ownership. Now, this is a relatively newer model for buying a home in the UK. And I will start by saying a shared ownership model is as halal as you can get. Okay? The product itself is as halal as you can get. But there are some practical considerations to be aware of, and I'm going to unpick these with you and help you understand some of the flags and pitfalls to be aware of. But the way a shared ownership product works is it's a genuine partnership. The shared ownership provider buys that property with you as your partner, shoulder to shoulder. They share risk in that property with you as your partner, shoulder to shoulder. They charge you rent based on the rental market rather than based on interest rates. And they act as a genuine partner in the property. It's as halal as you can get. And there is no difference of opinion amongst this. But there are some practical considerations which I'll break down for you on the next stage, inshallah. So, the benefits of a shared ownership product, well, first of all, they are debt-free. It's a genuine partnership. So, the way it works is you part buy the property and you part rent the property. If it's a 100k property and you've put in 20k and they've put in 80k, you own 20% of the property and you rent the 80% that you don't own. Very, very simple. You are under no obligation to buy their share from them. So, you have a rental agreement, one contract of sale. You do not have a purchase agreement, which would be the second contract of sale. That would contravene bay'ataini fi bay'a, two contracts of sale in one. You don't have this issue with shared ownership because your only obligation is to pay your rent, one single contract of sale. Now, let me give an example where I'm renting a property from my landlord. Okay? So I'm paying rent to my landlord. That's one contract of exchange. Okay? I am buying the right to live in the property and use the property. One contract of exchange. If I go to my landlord and I say, Mr. Landlord, I really like your property. Can I buy your property from you? And the landlord says, yes, sure, this is the price, buy it from me. So I'm now buying the property from the landlord. That is a second contract of exchange, correct? Is this halal or not? Halal. Why? There's two contracts of exchange.
Because it has nothing to do with the first contract.
Excellent. This brother, mashallah, is on fire. Right. Although there are two contracts of exchange, they are not dependent on each other. They're completely independent. So when you go to your landlord and say, I would like to buy your property from you, there is no obligation on you to do that. There is nothing in your contract stipulating you must do that. And it is your decision to go and offer to do that, completely independently of the original contract. In actual fact, you can have 100 contracts of exchange as long as they are not dependent on each other. And a simple way to think of this is, I can have a contract of exchange with my landlord to rent his property from him. Simultaneously, I can have a contract with Sheikh Salman to rent his car from him. Simultaneously, I can have a contract with Bilal to buy his phone from him. These are all contracts of exchange, but they are not dependent on each other. And this is common sense. Your fitra already knows this. Okay? But the minute they become dependent on each other is where you have a problem. So, with a shared ownership provider, your only obligation is to pay your rent. Take reasonable care over the property, pay your rent. You may approach them to buy more equity from them. But this is optional, not obligatory. It is completely separate, and therefore it does not contravene bay'atayn fi bay'a. Okay. Generally, there are less strict entry requirements. What I mean by this is, people who cannot or do not want a mortgage quite often find they can get a shared ownership product. Now, who can tell me, on average, mortgages, what multiple of salary can you get finance for with a mortgage on average? Generally speaking, who knows? 4 or 5 times. Excellent. With shared ownership providers, who knows what multiple you can get? What can it go up to? There are some shared ownership providers that will let you buy a property up to 20 times your salary. Sounds fantastic, right? You can buy a mansion. What's the red flag here? What's the thing to be aware of here?
It's going to take ages to clear it out.
Excellent. MashaAllah, this crowd, you're one of the best crowds we've had, MashaAllah. You guys are really on it, MashaAllah. The problem is, if you buy a mansion and all of your affordability is going into paying your rent, because that's your only obligation with shared ownership, right? So your affordability assessment is just done on your ability to pay your rent. So if all of your affordability is going into paying your rent, how are you going to find the money to staircase and buy more equity and get to full home ownership? This is pitfall number 1. Don't be fooled by the fact that you can buy a much bigger house. When considering shared ownership, you need to have a long-term vision. You need to have a plan. How am I going to staircase up? How am I going to get to full home ownership? Right? If all of my money every month is going towards paying the rent, what other means do I have to buying equity and getting to full home ownership? That's what you need to understand. So that's the first pitfall, practical element. No Sharia issue, but it's a practical issue to be aware of. You need to have a long-term view, you need to have a plan. Okay, some of the cons, this is pitfall number 2 to be aware of. Some shared ownership contracts are very, very harsh. Not all of them. And it varies because each shared ownership provider has different terms. There's no real standardization. But some contracts, and I'm not going to name names, it's up to you to check the contract. Some contracts will have a clause stipulating that if you miss one rental payment, they can take your property away from you and give you nothing. Very, very harsh penalty clause. Okay? So, this is where, if you're considering a shared ownership product, it's imperative that you get your money's worth from your lawyer, from your solicitor who's representing you. Their job is to make sure you understand the contract you're getting into. And in my experience with conveyancing solicitors, they're very busy. They have lots of cases to juggle. And so if you're not pushing them, they're assuming you're okay. So if you're considering shared ownership in particular, hound your solicitor and make sure you understand every single detail of that contract. Because if there is a clause in there saying You miss one rental payment, we have the right to take you home away and give you nothing. You need to be comfortable with that. You need to understand, am I happy with this clause or not? Okay? And you might be a risk taker, you might be willing to take that, or you might say, you know what, this isn't for me. But you need to understand this. So that's pitfall number 2, especially with shared ownership, because the contracts are not standardized, they vary widely by provider. Make sure you get your conveyancing solicitor to do their job well. They can be very expensive, and we're going to cover why this is. So, when you're paying your rent every month, you're paying market rent. Generally, market rent is higher than interest rates. So the rent you're paying is generally higher than a mortgage. Fine, no problem. This is actually a fair rent to pay. If you're happy renting that property ordinarily, when you're renting from your landlord, you're not saying, Mr. Landlord, the rent I'm paying you is higher than if I was paying a mortgage. You're paying genuine rent, and the rent costs what it costs. There's nothing wrong with this. But the problem comes, it's not a problem, it's a practical consideration. When you want to staircase, when you want to buy more equity from them, what the shared ownership provider typically do is they will get you to revalue the property. So you'll have to pay a valuation fee, which costs money, and then they will get you to revalue the property. Now, who can tell me, in the UK, what do property prices tend to do? Go up over time. How much by year on year, on average? 10%, 5%, 5 to 10%. Okay? On average, property prices go up 5 to 10% per year across the board in the UK year over year. Who can tell me what do wages tend to do? Stay the same. 1%. Excellent. Long-term wage inflation in the UK hovers between 1 to 2%. So if your salary is going up 1 to 2% per year on average, but the cost of buying more equity in your home is going up 5 to 10% per year on average, is that property become more and more unaffordable over time? Yes. It's going to become harder and harder to staircase over time. And typically, within 5 to 7 years, you'll find it's now unaffordable to staircase. Right? So most shared ownership providers, they do not market themselves as an alternative to a mortgage. Most shared ownership providers, because they know within 5 to 7 years it's going to become impossible for you to staircase, most shared ownership providers market themselves as a stepping stone onto a mortgage. A short-term stepping stone for people who perhaps need to build up their credit because they can't get a mortgage right now. So pitfall number 3, if you're considering shared ownership, again you need to have this long-term view, and you need to ask yourself, what am I going to do in 5 to 7 years' time when the property value increases? Am I a high professional earner and my income is going to go up 5 to 10% per annum to match it? Or do I have an investment that's maturing in 5 to 10 years' time to help me buy out the equity? Or do I have friends and family who can help me in 5 to 10 years' time? Or do I have another provider I can go to in 5 to 10 years' time? You need to have that long-term plan. With shared ownership, if you are only looking here, it might not be the right product for you. You need to look all the way over there. And you need to think at least 5 years ahead, ideally 10 or even 20 years ahead. And if you're incapable of doing that, I would just say be very, very careful when considering shared ownership. I'm not saying it's not right. From a Sharia perspective, no issues whatsoever. But the practical considerations are very real, and you need to make sure you're planning accordingly. I've already mentioned the fact that you'll pay valuation fees each time you staircase. Okay. Providers in the UK, you've got the likes of Your Home, very well established. We'll do Q&A again if that's okay. Very well established. Way Home, they're slightly newer. You've also got some local authorities doing shared ownership as well. Now, the ownership profile is very interesting with shared ownership. So, the red bar represents what you own, and the blue bar represents what they own. Now, on day one, if you put in 20% and they put in 80%, you are 20-80 partners. At the end of your 30-year term, the ownership profile here hasn't changed. Why? Because with most shared ownership products, there is nothing in the contract getting you to staircase. So the point being, unless you proactively approach them, and most shared ownership providers will give you 1 or 2 windows in the year to approach them and buy more equity. So you have to save up money in between, and then you have to remember to approach them in the window. And if you forget, they won't remind you, and you'll lose your opportunity. So it's again, the 4th practical consideration is, as part of your planning, you need to remember to save up in between windows and remember to approach them to buy more equity during those windows, otherwise you could lose out. So unless you do that, your ownership won't increase. You'll just pay rent over time and your ownership won't increase. It's up to you to remember to do that. There is nothing reminding you or incentivizing you to do that. Okay, that's shared ownership. So as I mentioned, very, very halal, but just some practical considerations to be aware of. Okay, we're going to talk a little bit about the FILA product as well. So the FILA product is also a shared ownership type product. We call it a co-ownership. It's a genuine partnership. We stand shoulder to shoulder with you, just like any other shared ownership provider. There is no debt, just like any other shared ownership provider. And we do have some unique features of our product, which I'm going to talk a little bit about. Okay, so the first thing is, unlike a shared ownership product typically, where you have 1 or 2 windows in the year, with our product, we have an app, which I think we've got a slide on in just a minute, where you can literally month to month choose what you want to pay. So it's by far the most flexible product. So you can go into your app every single month and say, this month I'm just going to pay my rent, click done. This month I'm going to pay my target payment. This month I'm going to pay more. This month I'm going to pay less. You have absolute freedom and flexibility. So it creates the most flexible product in the market. It's also very affordable, and this was something very, very important to us when setting it up. Our vision and our mission is to increase wealth and home ownership, particularly amongst Muslims who are extremely financially excluded in the UK. One thing we often say is you don't have to be poor to be financially excluded. Muslims are terribly financially excluded. Even Muslims who are earning good money are terribly financially excluded because there are just not enough products for Muslims in the UK. So our mission in setting up FILA is to increase wealth and home ownership, particularly amongst Muslims. So what we decided very early on was, even though we're offering a shared ownership type product, shared ownership type products tend to be significantly more expensive than mortgages. We decided that we want to make it affordable. So what we do is, when we sell equity to you, we don't revalue the property. We sell it to you at the original cost. So even if the property is going up and up and up and up in value, we still sell it to you at the original cost, and we gift all of the upside to you. We make our money off the rental income. And we decided we are satisfied making our money off the rent. That way we're transferring wealth to our customers. The upside in the property value is going to our customers, and that is part of our mission. So it ends up being a very affordable product. You have all the benefits of a shared ownership product, but with the price point that is actually competitive with a mortgage product, and that's something we're very, very proud of. We also provide discounts on a monthly basis, because although there is no obligation on you to buy equity from us every month, we want you to get to full home ownership. We know our customers aren't coming to us to just rent a property. Our customers are coming to us because they want to get to full home ownership. We want to help you achieve that goal. So what we do is we incentivize you. And what we do is we say, okay, you want to fully own your home in 30 years. Here's how much equity you'd need to purchase from us every month. And if you stick to this target, you will reach full home ownership in 30 years' time. Now, what we do is we say, whenever you stick to that target, we're going to give you a rental discount in that month. And that way, it's your incentive to stick to your target and reach your goal, right? And you can actually change your target as well. We allow you to change your target up to once every 3 months, so that in the example I gave previously, where you've been promoted, you want to start paying more, you have the ability to change your target and start paying more and still get your rental discounts. We want to facilitate all of this. So we give discounts on a monthly basis to help you get to your goal. And we also have something very unique in our product called an equity buffer, which creates security in times of hardship. So with a conventional mortgage, or indeed an Islamic Bank mortgage, let's say your monthly payment is £1,000 per month, and in a given month you've only got £800 in your pocket because your car broke down and you had to pay the mechanic, right? In a mortgage product, you're now in default. You're £200 short because you have to pay the full £1,000 on the notes. So the bank will generally give you a couple of months to make good on that shortfall. They'll charge you interest in between if they're a conventional mortgage. And if you don't make good on it within a couple of months, the bank may very well take your home away from you, right? With FILA, every time you buy equity in your home, you actually get tangible equity as a partner. So what this means is, if you can't afford to pay your rent, you can actually trade equity with us instead. And this is what we call your equity buffer. So let's give the same example. Let's say your target payment is £1,000, which is your rent, plus your target level of equity purchase. In a month, you've only got £800 in your pocket. Well, that's fine. You can just go into your app and say, this month, I'm just going to pay £800, which is maybe your £500 of rent, plus £300 of equity purchase. So you're just buying less equity from us in that month. That's not a default. You're very welcome to do that. You can also go higher, lower, whatever suits you. Now let's say, you've lost your job. Can't afford to pay your rent. You owe £500 of rent. Well, in a mortgage product, if you lose your job, you're on your knees, going through the hardest time of your life, the bank may very well come and kick you while you're down and take your home away from you. We think this should be criminal, right? With the FIDA product, if you're down on your knees going through the hardest time of your life, you know you've got your equity buffer to fall back on. And to put it into perspective, an average customer of ours who has 10% equity in their home, who loses their job on day one, that 10% equity buffer will last, on average, 2 to 4 years. So that's 2 to 4 years of equity if you lose your job on day one, 2 to 4 years of security when you're going through the hardest time of your life. So instead of thinking, oh my God, how am I going to pay the mortgage? You know you've got the security of the roof over your head, so you can focus on what's important. Getting back on your feet, finding another job, and starting to make payments again. This is the beauty of the Islamic partnership. This is the wisdom behind a partnership in Islam, because a debt only protects the lender, whereas a partnership protects both sides. Can you see, when you've lost your job and you can't afford your rent, by falling back on your equity buffer, it protects you, but it also protects us, because you don't default. This is the wisdom of an Islamic partnership. It's not because we're particularly clever, this is just the wisdom of the Shari'ah. SubhanAllah, it's just a beautiful product. So this is how our product operates. I think we've got a slide on our tech. Yes. So this is the single feature our customers love the most. We get the best feedback about this. I'm going to very quickly talk about this, and then we're going to get to the... we're going to get Kashif to say a few words about his home ownership journey with FIDA, and then we're going to get into Q&A because we've covered a lot today, and I'm sure you'll have lots of questions. So the way the FIDA app works is, when you buy a home with us, you get a dashboard, and on your dashboard you can see all the metrics to do with your home buying agreements. You can see how much equity you own, how much is left to purchase. You can see your monthly payments and how they break down between rent and equity. You can see your future payment projections. You can see how you're doing against your original projections. All the information you might want to know to understand how you're doing. You can also then go and manage your payments from here. So you can go into the app any month and say, this month I'm going to pay X amount, click, and it's done. No problem at all. So rather than the Barclays Bank example, I'm just picking on Barclays, where if you want to start paying £1,200, you'd have to go through the time, the cost, the headache, the commitment of applying for a brand new mortgage product. With us, you go into your app. I've been promoted, I want to start paying £1,200 per month. You go into the app, enter 1,200, click, and it's done. You don't have to apply for a new product. You don't even have to speak to us if you don't want to. And we know, in today's modern digital age, just like when you're ordering a taxi, gone are the days where you'd call the taxi company, pray the taxi arrives on time, pay cash out of your pocket when the cab comes. Nowadays, what do? You go on your Uber app, you order your taxi, you see exactly where it is, pay online digitally, and you get on with your busy lives. In today's modern digital age, we know people want to just get on with their busy lives rather than come and speak to us in branch or whatever the case may be. Of course, we're there if our customers need us, but we see the vast majority of our customers just completely self-serving through our app, and it gives the freedom to do that. Where it gets really exciting is what we call what-if analysis. Let's say you've saved up some money. You've saved up £10,000, and you can go into the app and do what-if analysis. What if I buy £10,000 of equity this month? What does it do to my term? What does it do to my monthlies? What does it do to my total cost? How much money do I save? Do I like this outcome? How about if I spread that 10,000 over the next 3 months instead? Which one saves me more money? Which one results in a better outcome? Which one helps me achieve my goals? This one? Okay, great, click, and it's done. You can do that at 3 o'clock in the morning, sitting on your couch at home, without even speaking to us if you don't want to. This is the power of the app that we've created. It provides all the tools to make your own financially informed decisions, and our customers invariably love this. Right, okay, so we've had a long session. I'm going to just round off with a very quick recap of the different products, and then we're going to get straight into Q&A. Okay, so just to compare all the products side by side, the FIDA product is a co-ownership product, a bit like a shared ownership product, so it is a partnership rather than a debt-based product. Bank mortgages tend to be debt-based products. Our product is generally quite affordable, so in some cases we're able to provide pricing that is competitive even with conventional mortgages. Not always. It varies by location, by individual customer, but generally The way to think of it is we are not a mortgage. We are not a bank. We are not providing a mortgage. We are providing a shared ownership product. And without a doubt, I can say with confidence, we provide the most cost-effective shared ownership product on the market, without a doubt. Because other shared ownership providers revalue the property when you buy equity. We do not. We give all of that upside to you. Okay. You get to full ownership at term with either just like with a bank mortgage, because we incentivize you to stick to your goal and a staircase every month. Shared ownership providers do not. It's up to you to remember to staircase. The FIDA product is very unique in the equity buffer, where if you're going through hardship, you can rely on your equity buffer to make sure you keep the roof over your head. It's by far the most flexible product on the market because you can literally choose what you want to pay every month. Bank mortgages tend to be very inflexible and rigid. Shared ownership is also fairly flexible, but you have to just remember to approach them during those windows. The FIDA product is Shari'ah compliant. We'll come on to 𝐿 in the next line. Bank mortgages, conventional bank, clearly are not Shari'ah compliant. They are riba-based products. Islamic bank mortgages are also Shari'ah compliant. They are vetted and approved by reputable Shari'ah scholars. And shared ownership products are also Shari'ah compliant. Now, I want to split this out into another line, which is called 𝐿 al-Shari'ah, i.e. the higher principles and aims and objectives of the Shari'ah. And this is, this is our own biased view, right? In our own biased view, FIDA is the only product that actually achieves the 𝐿 al-Shari'ah, the higher principles and aims. Why do we not believe the others do? Well, conventional bank mortgages aren't Shari'ah compliant. Islamic bank mortgages, the only reason we put across there is because there are grey areas. They are not perfect. There are room for improvement. And although they do meet the minimum criteria of being Shari'ah compliant, what they don't do is result in different worldly outcomes for individuals compared to a conventional product. Similarly, shared ownership, although the product itself is very Shari'ah compliant, the only reason we put across there is because, as I mentioned, some shared ownership providers have very, very harsh penalty clauses, which perhaps are not in line with the justice and principles of the Sharia. And also, many times, shared ownership products, they are funded by bank debt in the background. So you need to understand where is the money coming from as well. And then finally, the key drawback with FIDA to be aware of is we are smaller than the other providers, so we do have a waiting list. We can't serve our customers immediately like some of the other providers. But this is where, if you are fond of the model we're building and you want to see this model propagate, then we require support from the community. We are not a bank, we're a community institution, so we rely on the community's support in order to propel this model. One thing we're not talking about today is we have savings products. So the way we fund homes, most providers, banks just use deposit money, right? Non-bank providers generally get a debt line from a bank, right? This is unpalatable to us, so we refuse to do this. The way we do it is very organically. We have savings products. Customers open savings products with us. That's the very money we use to fund homes, and we give a halal return to the people opening savings products with us. So if you're interested in supporting our model, you can check our website. Our savings products are investment-based. We're not a bank. It's not a deposit. It's an investment. It's property risk, and you need to be comfortable with that. Investing isn't for everybody. But if you are interested in that, please check our website, and if you want to support us, then please do look at our savings products. The only way we fund homes, the only way we grow, is by people like you supporting us. And to date, alhamdulillah, from everyday people like you, we have raised over £70 million. Alhamdulillah. This is the power of our community when we come together. And that's money we've used to fund homes for real people like you, like Kashif and his family, one of our first home buyers, in fact, alhamdulillah. That's what happens with the power of community. And I talked about earlier on that day when I was an Arafah, saying, Ya Allah, what will you say to me on that day? I want each of you to think about that as well. When Allah asks you, we all hate riba in our hearts. We all speak out against riba with our tongues. I believe FIDA represents an opportunity to change riba with our hands. So, what do you want to say to Allah on that day when He says you had an opportunity to change riba with your hands? Did you support it? Right? The only way FIDA can grow is through the support of the community. But I don't want to push that too much here. I just want you to think about that. And if you do want to support us, please do check out our website. So that is everything covered for today. The final thing to end on is, if you found today's presentation useful, we have a free home buying guide. It's, I think, 26 pages long. Covers everything we covered in the presentation today, plus a lot more detail. So if you want to download that, you can scan the QR code, and you can download that for free, and you can also find out more about what we do as well. But with that, inshallah, we're going to get into Q&A. I know it's been a very heavy session. I know we've covered a lot today, but inshallah, we're here for as long as you need us. So please feel free to now ask your questions. Yes?
Who actually owns the Islamic banks?
Who owns the Islamic banks?
Yeah.
Wealthy investors. So if you take 𝐼𝐻 Bank, they are owned by the Qataris. They have very, very wealthy Qatari investors. And 𝐼𝐻 Bank, it sort of transformed from the Islamic Bank of Britain, which is the team that now operates OFA. And Islamic Bank of Britain was originally set up to be a community institution to serve the underserved. When the Qataris came in, they had a slightly different vision. They decided that they want to actually serve high net worth individuals from the Gulf and the Middle East. So now generally they just provide services to very, very wealthy individuals because that's where the money is. Yes?
You know the rental income that someone would pay for your scheme, does that decrease as your home ownership goes up, and also as time goes on, I'm assuming that rental income goes up, the amount that rental income goes up, is it at all based on economic conditions that relate to interest rates, monetary policy, etc.?
Excellent question. So the brother's asking, does the rent that our customers pay, does it decrease as their ownership increases? And do rent reviews, are they pegged to economic conditions? Okay, so the first thing is, I'll cover a third question as well, which is how do we determine the rent, right? So the way we determine the rent on the property is we get every single property surveyed, right? A bank doesn't. Bank only cares about the value of the property. Is the value sufficient to cover collateral for our loan? Whereas we care about the property itself. We want to know that this is a property we want to invest in and a property that you want to raise your family in. So we get the property surveyed, and as part of that, we come up with a rental range for this property. So we look at what is a reasonable rental range for this property in this area. We come up with a low, medium, and high estimate. And our mission is to charge a rent within that reasonable range. We also have to overlay what do we need to actually charge as a business to make money, right? Because if we're charging a rent that is below our cost base, we can't make money on this property. So it isn't necessarily a good investment for us. So what we do is we know how much we need to charge. We know what a reasonable rental range is. And in some areas, we don't charge any more than we need to charge. So in some areas, the amount we need to charge may be at the bottom end of the rental range. And that's a good deal. Some areas it may be in the middle. Some areas it may be at the top end. And we'll have that conversation. We'll say, look, for this property to make sense for us, we need to charge you a rent at the upper end of the range. Are you still comfortable with this? And invariably our customers say, yeah, that's fine, because they know actually over a 30-year period, they're getting all of the upside in the property, and actually it's still a damn good deal, right? So that's how we calculate rent. Now the question was, as you buy more equity, does the rent decrease? Yes. You're only ever paying rent on the share you don't own. So let's say your monthly payment is £1,000, and I'm just going to make really simple numbers. On day one, that £1,000 is £500 rent and £500 equity, right? The equity purchase is optional, but if you stick to your target, you pay £1,000. Now, in month one, you've purchased £500 of additional equity. So now in month two, although you'll still pay £1,000 again, because we calculate a target where you don't have to change your payment every month, we calculate a target where you can pay the same amount, and it automatically fixes itself. In month two, you're now paying rent on a slightly smaller share. So although you pay £1,000, maybe that £1,000 is split £498 rent, £502 equity. And so you can see more and more of your payment goes towards staircasing every single month. As you own more of the property, you're paying rent on a smaller and smaller amount. Now the final question was, how is rent reviewed every month? We do a rent review once a year, right? So your rent is fixed 1 year at a time, just like renting from a landlord. Now the way the rent is reviewed is our tech is plugged into land registry, sold property price information. It looks at properties selling in your area over a 5-year period. And if property prices are going up, your rent will go up. And if property prices are going down, your rent can even go down. And it's capped and floored so that your rent never spikes, it never moves by too much in any given period. And it's calibrated so that your total target monthly payment should never move by more than about 1 or 2% after any given year's rent review. Can anyone tell me why we chose 1 or 2%? Salaries, exactly. So we've calibrated it so that your total monthly payment should broadly move in line with wage inflation. So whereas with a bank, every 2 years, you have a 2-year fix and then it spikes up to a variable rate. So every 2 years you have to remortgage. We've designed the product so that once you're in the property, it should remain affordable to you throughout time, so you should be good to go forever, inshallah. Does that answer the questions?
Yeah, so essentially your rental increase is done on salary increase and not other factors.
The rental increase is done on the property market movements. So it's not based on interest rates. It's based on local property price movements.
That's capped 2%.
Yeah, it's capped, so your monthly payment shouldn't move by more than 1 or 2% to make sure your affordability remains roughly constant. Yeah? Yes, brother.
How much percentage minimum you need to buy from you?
Okay. Yeah, so we recommend 20%. We accept 15%. The reason we recommend 20% is because 20% is a decent chunk, and that reduces your rent by 20%. That makes it easier for you to staircase and get to full ownership. So we recommend 20%. That gives you a really good chance of staircasing more easily.
Is there a minimum price of the property that you look for?
So if it's a property you're buying to live in, the minimum property price is £100,000 that we support. We also do buy to let. So if you're buying a property to rent out, the minimum price is £50,000.
Stamp duty is there as well? The stamp duty that you pay for the property?
Stamp duty is a really good question. Chef, do you want to cover the stamp duty point?
Yes. So when we purchase the property, we purchase the property together with us in a co-ownership. And what we do is we pay the stamp duty, and then when you buy the property back off of us, we will factor that into the price of the property at which you'll buy off of us, which will be spread over 20, 25, 30 years. So over a long period of time, in terms of the property appreciation, it actually pales into something that's generally insignificant. And that's why a lot of people, because of the benefits of the product over the long term, they feel it outweighs the fact that the stamp duty is factored into the price at which we'll sell you the property. Does that make sense?
The way to think of it is, imagine you're renting a property from your landlord. So you say to the landlord, I want to buy your home from you. The landlord will say, right, I bought it 30 years ago for £100,000. It's now worth £400,000. So you pay me £400,000 because that's what it's worth today, right? That's fair. What we do is we say, right, we bought it 30 years ago for £100,000. It's now worth £400,000, but we'll sell it to you for £110,000 because we paid £100,000 and we paid £10,000 stamp duty. So you just pay us what we paid, and all the rest is your immediate gain. So you actually get all of the ups. Yes?
I just wanted to find out about the staircase. The conventional way, like you said, was that if a purchaser has a share, 20%, you own 80%. The conventional way is that after a certain period of time, they can staircase upwards to purchase more. But it's an open market review with the surveyor to see what it's worth. With your model, you say that the price is fixed, so whatever it is for duration is fixed. What if someone wants to sell their share on the open market? Are they allowed to sell it for higher than what they paid? Or do they...
Yeah, great question. So when we sell to our customer, we sell at original cost to make it affordable and to basically gift our upside to the customer. Even though it's our right to charge market price. But we know that becomes too unaffordable over time, so we actually gift that upside to the customer. If you want to sell the property on the open market, and there's a profit realised on that property. Now, in this situation, we're your partner, we've taken risk in that property with you, it's fair that you take your share and we take our share. That's a partnership, right? So if you're selling the property to move on, we each take our share of the upside. That's a fair partnership. The exception is if you're selling the property to upsize. Your family's growing, you need a bigger property. That's again part of our mission, we want to facilitate that. So in that situation what we say is, okay, you take your share of upside, we're only going to take half of our share of upside and we're going to gift half of our share to you to facilitate you upsizing. So we try and be as generous as we can to our customers, whilst also being fair to ourselves, fair to the fact that we are genuinely taking risk in this property alongside you.
They wouldn't be restricted to selling it to.
No, so if you want to sell it, the principle of a partnership is we both have to be happy with that sale. So let's say the property, we bought it for £100,000 and it's now worth £200,000 and you want to sell it to someone for £20,000, right? You can't force us to take a loss like that. That's not a partnership. In a partnership, both partners have to be happy. But as long as you're selling it for a reasonable price, you're not forcing us to take a loss, then yeah, you're free to sell it to whoever you like.
And you have to first charge on the property as well, is the partnership. Because you hold the title.
No, so it's a co-ownership, joint title. So your name is on the title deed and so is ours.
So you wouldn't insist on purchasing it and the person could sell it on the open market?
It's offer and acceptance. So if you want to sell the property, we may offer to buy it from you, right? You don't have to sell it to us. Just like I can't force Bilal to buy my share of the car, right? I can offer, and it's offer and acceptance. So if you want to sell the property, there may be instances where we say, why don't you sell it to us? But if you don't want to sell it to us, if you want to sell it to someone else, as long as we're both satisfied with that sale, that's absolutely fine. An instance where we may buy it from you, let's say you want to exit this property and the property market is depressed. So the property value is actually decreased. Now, we don't want to take a loss, right? Because we're going to incur a loss for our investors and savers. So we might say, look, we can't take a loss in this property, but we know you need an exit. So what we might say is, okay, we bought this together for 100,000, it's now worth 80,000. Instead of you selling it for 80,000 and we both take a loss, maybe we'll buy it from you for 80,000, and that way we don't take a loss. So we still give you your exit, we buy it for the depressed market value, and then we have an opportunity to wait for the property price to recover and then sell it down the line when the property price is recovered. Just going to plug this laptop in.
Just on that point, sometimes people ask us, well, what if I need to move on? I need to sell the property and move on. So our contract says that if you want to sell the property, so long as it doesn't cause us to incur a loss, then we're obligated to allow you to sell because people need to move on. The difference between us and the customer is living in that house, whereas we're not living in the house. So there is a difference between our role in the relationship and the customers. And customers will often want to have the flexibility when they wanted to be able to move on, and we shouldn't be able to stop them so long as it doesn't incur a loss for us.
Do you have to invest in your savings option to be able to take out?
Great question. So, as I mentioned, we're a smaller player. We're a fairly new player on the market. I say fairly new. We've been doing this since 2019, alhamdulillah. But we do have a waiting list, and that waiting list is quite long. So we've got two waiting lists. One is what we call the public waiting list. Anyone can join the public waiting list by just going on our website and signing up, but it is very, very long. Anyone who supports this project by opening a savings account with us and helping us to help others while they wait goes onto a separate waiting list, and that waiting list is shorter than the public waiting list. So it varies. On our website, if you go into the help section, there's FAQs and you can search the wait times. There's a whole table. It's generally based on two things. One is how much funding you need from us. If you need a lot of funding, it's going to take a bit longer. And the other is how much you're supporting others while you're waiting. So what I mean by that is when you open a home savings account with us, a savings account for someone who wants to buy a home with us, that money becomes your down payment. Now, there's no point us prioritising you if you've not got your down payment ready. So if you've only got £1,000 in there, we know you're not ready, so there's no point us prioritising you. Whereas if you've got your full down payment in there, we know you're ready, and you're supporting others while you're waiting, we're going to reward you for that by serving you quicker, right? So generally, even with that mechanism, if you're in like the top tier of savings, and you only need a small amount of funding from us, so up to 200k, even then the wait time, like the best we can do is about 9 months, right? So it's still a wait, because there's a reason for this, by the way. With banks have money on tap, right? How do banks operate? They operate on the principle of printing money. Banks have a license to print money. You go on the Bank of England website, it says this plainly. Banks can actually print as much money as they like with no constraints. So when you put £100 in your bank account, the bank is going to use up to £98 of your money to lend on somebody's mortgage. Now your bank balance still says £100, correct? But somebody else now has £98 to buy a house with. So where's that £98 come from? It's actually come out of thin air, it's magic. And banks have a license to do this, right? So banks can multiply up money at will. Now what happens when you're printing money? What happens? What does that cause? Inflation. Why are properties so expensive in the UK? The cost of a property should be the cost of the bricks and mortar and the labour and a bit of supply and demand economics. Properties in the UK cost a lot more than that because banks constantly print more and more money to lend on mortgages. That's why properties cost so much. We don't do that. We don't print money. We only use existing money to supply to purchase homes. Now that means we just can't go as quick as banks because we're not printing money out of thin air like banks. But it also means we're creating a much more stable housing economy. Brothers, I've just realised I was meant to get Kashif up to say a few words. Please, if you wouldn't mind, I would love for you to just say a few words. He's been waiting very, very patiently. Kashif is a very special individual because he was actually one of our first ever home buyers and he bought his home just down the road. And he's going to tell you very, very honestly his experience with Fiverr, the good and the bad, because we're not perfect. We're small. We can't provide as good a service as the big, big banks. But we are very sincere and we're trying our best, inshallah. Please.
We can't protect ourselves from doing anything. We can't protect ourselves to stop buying home with a riba. So first of all, we need to ask Allah to protect us from this. And inshallah, if you have the good intention and work for it, Allah will help you. So my experience was that it was smooth. Yes, there is a long waiting list, but at that time we weren't prepared because we need a big deposit to deposit first. So first thing is that I will say, this should not let you down. Just work on it and keep saving. And also think like this: when you're investing with them, you're prioritizing your list. You're going up to in the waiting list, but you're helping somebody else to buy the home somewhere else in the UK. So you're also helping your brother. So I will suggest that waiting list, yes, this is a big thing for some people, but it's worth waiting for it. Second thing, it can take longer with the process compared to the normal mortgages. Yeah, but I noticed that Raza was very helpful. And whenever I contacted him, he made sure that things which need to be done on time, they were done on time. It took a bit
still
longer.
WhatsApps me today.
Yeah. So there was a bit waiting list, but things have changed now. They have improved a lot because when I bought the property, I think there was 2 solicitors involved, and now it's changed.
Yeah.
And also I think the minimum deposit 15%, which can also help. So yes, it is like comparatively slightly patient. You need to be very patient, but it's worth it. Main thing was that I was confused to go for it or not because there was other alternatives like we discussed in the different Islamic mortgage provider. But there was still some gray areas. So I was confused, but my wife said, no, I want to live into home where when I sleep, I don't have this thing in my mind that I'm paying interest. So alhamdulillah, this ticks all the boxes faith-wise, and Allah knows best. There are some suggestions I would like to make is that they need to work on their communication. There should be a direct phone line. Now, I think they have introduced the live chat, isn't it?
We've got live chat.
Yeah, that's a good thing. And then they don't like delayed, but it is recommended to have some kind of direct phone line. Sorry. And the second thing that I think they should have some kind of sample on their website about the whole contract. Like, I think, correct me if I'm wrong, like when you're going to buy the full share, the last 5% you have to value again. Is that correct?
No.
Okay.
Only if you take a very, very long time. Then we might require that.
Require that, yeah. Yeah. So if you need any question, I don't know if Raza is happy, take his number. He's happy to help me answer, but I'm sorry to say that without your permission.
No call centers in India.
Do you want to ask me a question?
Jazakumullah khairan, Kashif. Thank you so much for sharing your experiences.
Yeah.
With the phone line, by the way, a lot of people say this, why don't you have a phone line? And the simple answer is because having a call centre requires a lot of resource and We're just not at that stage yet. But we've got live chat. You can speak to someone live through live chat. Inshallah, we're introducing WhatsApp chat as well. So you can chat to us on the go as well. But phone lines, we've just decided at the moment, don't make economic sense for us, but hopefully soon, inshallah. This brother's been waiting. This brother?
Yeah, I was going to ask, with the savings one, shorten your time, could parents do that on behalf of their children, so that's in 5 to 10 years' time?
Absolutely.
Kids are now ready and it's in their name.
Absolutely.
So you can do that.
Yeah, we get a lot of parents doing that to get their children ready. Yeah. Yes, brother.
Like,
Come to you next.
if you look for a flat or something, so there will be like a lease and the ground rent and all stuff. How does that come into your?
So generally, we prefer freehold properties. If it's a leasehold, there has to be at least 200 years remaining on the lease, and we generally don't do flats. I'm just conscious. I know we've got some sisters. If there's any questions from the sisters, brother, I don't know if there's a way for the sisters to ask their questions as well. Yeah, brother at the front.
So just to confirm, like, just cash purchase, right? The 80 and the 20. Cash purchase that you're buying the house.
So the brother's asking, is it considered a cash purchase? So at the point of completion, yes, we will transfer the cash to the seller. But you get some sellers asking, they prioritise cash purchases. You wouldn't be considered a cash purchaser because you're still using a funding provider. Does that make sense?
Cash purchase, so you want to refurb and then revalue it.
That's a bridge. We do bridge as well. We provide bridge funding as well.
But when you refinance it, how you actually, how do you go? That's what I'm trying to understand. I know the normal way of doing it here.
So let's say you want to buy refurb and flip, right?
Yeah.
So you only need funding for a year. So we can provide that. So we provide you short-term funding. You don't have to service it. So you can just let the rent accrue rather than paying it every month. And then at the end, when you sell the property, you just pay all of the outstanding rent at the same time.
What do you refinance it to buy to let?
Refinance to buy to let. In theory, it can be done, but on bridging, we can go pretty quick because we have an investor who's willing to fund those. On the buy to let, you've got the waiting list, so it might just not line up. But otherwise, if it wasn't for the waiting list, we could do it.
With the bridging, is it the same? What's the ratio there? Or the deposits,
Sorry?
With the bridging, is it a different deposit?
20%. Yeah. We've just been asked by the organisers to make sure this doesn't become a FIDA promotion session. So it's meant to be a very educational session. So do feel free to ask questions about other products as well. Of course, if you want to know about FIDA, very, very happy to answer those. But we just need to be very careful to not turn it into a FIDA promotion session. Yes, brother at the back.
You told about the bank and like two transactions at the same time. When someone goes to any bank or any provider, and they normally go there with the mindset that they have to buy the house. So is Islamic point of view, is there anything wrong with that? Because the bank is not forcing you to buy their share, or the Islamic Bank is not forcing you to buy their share. Basically, you also want to have their share. If this thing is in the contract, is this Islamic or not?
So I understand. It's a very good question. So what he's saying is, the brother's making a very good point, which is, in an Islamic banking contract, in a home purchase plan, the intention of the bank and the customer is the same, because the intention is that the customer will eventually buy out the bank's share. The issue here is, because the bank has created a debt where the customer has to buy the bank's share, and therefore the risk in the property is passed completely onto the customer. Now, if everything goes according to plan, if house prices keep appreciating over time, then there won't be a problem. But what happens, for example, if house prices go down and the customer can no longer afford to buy, or they lose their job, right? Something happens unforeseen, they can no longer make their payments. what will the bank do in that situation? Will they take their share of the risk? And that's the fundamental litmus test that the Sharia asks you. And if you look at those contracts, it actually says that, for example, if the house is destroyed, this clause is actually found in the Islamic banking contracts. If the house is destroyed, then it says to the customer, you must immediately buy our share. So whatever's remaining. So of that example I gave at the beginning, suppose it was 80,000, halfway through the contract, suppose £40,000 is left, and now the house is worth nothing because it's fallen into the sea. The bank will say, you must immediately buy our share of the house for £40,000. And you're wondering, what am I buying? It doesn't exist anymore. Do you see? And that really tells you that actually what's happening here is that it's a debt, just like a conventional mortgage. So it's in those stress situations that the difference between a true partnership and a debt-based contract comes to the surface. Does that make sense?
What about if we both are sharing, in ownership? What about first-time buyers? Government gives them some incentives in terms of, to climb on the property ladder for the first time. But if I want to buy, but you are not the first-time buyer because we both are doing kind of in a partnership. So where did that first-time buyer incentive sit, or we don't get it at all?
So again, this is a really, really good question. It's something that we're trying to solve for, and we're actually speaking to government about, because the first-time buyer incentives and many other things, for example, right to buy and other things, Islamic providers, not just us but others, are not able to serve those customers because the legislation is created not with Muslims in mind, and also not with genuine Sharia compliant solutions in mind. And so in a sense, in this UK, we have a two-tier system. So you have banks that get certain privileges because they're banks, and because it's the banks with their muscle who lobby government and create laws that support the banking system. And so what we're doing is, as a Muslim community, we have to build up our power base through building community-based financial institutions, so that we're now able to highlight this disparity in the way banks are treated to non-banking financial institutions, and say, well, this is unfair, and that process is ongoing. So at the moment, unfortunately, in our product, because it's a co-ownership, and because we're a company, our customers don't get that first-time buyer's relief. But having said that, we still find, how many people do we have on our waiting list? 15, 16,000 people? People are still coming for our product, because actually the benefits and the flexibility and the peace of mind that people have in our product, and also the price competitiveness, mean that some people are saying, well, actually, there's, you look at the pros and the cons, and Raza went through all of those earlier on, and so people are making their own informed decisions. Now, that doesn't necessarily say that our product is the right product for any particular individual. It's for each individual to look at the range of products that are available, look at the pros and cons, look at their circumstances, and decide what's best for them. And of course, you can always take financial advice, because sometimes people just need a third party who's independent to look at their circumstances, look at their income, look at what's available to them, and then give them independent financial advice. So we'd recommend highly that if you're not sure what the best option is for you, always go out and get financial advice.
Yeah, one thing I'd just add to that is, the FIDA product, we've tried to build a product that's really taking Islamic finance to the next level, but we're small, we have a waiting list, can't serve people straight away. So you need to understand your own individual circumstances. Maybe you like the product, but maybe you can't wait that long to buy a home with us because there's a waiting list. And every individual's needs and circumstances are unique. So we come across families who, they're a family of 5 or sometimes 7 people living in a 2-bedroom flat, and they've got teenage children, male and female, sharing a room together where they have no privacy, right? And this is not a dignified way to live. So a family like that needs a home now. So we have to be very sensitive to every individual family situations. Can we judge a family like that for going and getting a product that's available now, rather than patiently living like that for the next however long? Maybe not. So, even though we believe the FIDA product is wonderful, we're very biased, right? Maybe it's not right for everyone. And this is, the aim of today isn't to come here and tell everyone FIDA's wonderful, buy a home with FIDA. No, we know we've got a waiting list. We know, there's no point us doing that, because we've already got a long waiting list of people to serve. We're here to help you guys understand the different products so you can understand what is right for you. Where do you draw the line? Where do you feel comfortable? And what fits in with your own individual circumstances? Maybe you're in a really great position where you're living with parents and you can afford to wait a year or 2 years to buy a home. In that case, maybe fibre could be the right product for you. Or maybe you are that family of 7 living in a very, very tight accommodation where your children have no privacy or dignity, in which case maybe we're not the right provider and maybe you should consider an offer product or one of the other products in the market. So we're not here to tell you which product to go for. We just want to give you the options available, inshallah.
Should we finish off with Uncle Amjad? Just have his hand up.
Yes.
Yeah, just on that point, is it possible for you to introduce a scheme where the waiting list isn't short just based on the amount of money invested, but also take into account people's situations, that somebody loses their home that they're renting, they have to move out, they need space, or the family that you mentioned, large families, overcrowded.
So it's not for us to make those decisions, because if we chose based on circumstances, other customers would be annoyed and say, well, my circumstances are worse, so why have you chosen them? So what we do sometimes do is if a family comes and they have a very severe situation, we might reach out to people on our waiting list and say, this is this family's circumstance, would you be happy giving up your spot to let them go ahead of you? That's the best we can do, because we have to be fair to everyone. But another option, which we've done in a couple of cases, in some areas we've had people saying, well, what if a bunch of us pool money together, like a committee? Can you facilitate that? And that we can do. So if there's like 10 of you who want to pool together in a committee to buy homes for each other, we can facilitate that. And that way you don't have to get on the wider public waiting list.
I fear that this could go on for many hours, so I'm going to have to draw a line somewhere, inshallah. If you do have some questions, please do make sure you can ask them. They've got contact details, etc. Bottom line, don't get a mortgage, guys. I think that's the summary of the talk. You've had PowerPoint presentations. When PowerPoints have been shown, that means it's serious. Don't get a mortgage. Otherwise, I'm going to tell both of the brothers and they will throw the fatwas at you. Jazakallah, may Allah reward you, brothers. Honestly, that was very in-depth and very detailed, and it gave a very practical sense of what we're up against. So for myself as well, it was really interesting to see the different types, because it's actually really overwhelming, right? I won't go too long, but I'm looking to buy a house. It's really overwhelming because you're given the same terminologies with different details and small prints. One I saw, and I won't name the name, is you have to pay the last 40% in cash as part of the contract, right?
It's actually 60%.
Is it 60%? Right, I don't know. One of them, I think it was way home. I don't really care, but 40. That's a trap, right? But brothers don't know about this. So anyway, you know to do the research. Check online as well, and also we had Ibrahim from Islamic Finance Guru as well. They've got quite a lot of detail on different purchase schemes, including PIDA as well. So thank you, Jazakallah khair. Really appreciate it, Raza and Salman. If you want to add any last words before I finish off.
Just last word. We're going to stick around if you want to ask more questions. We've also got Omar Khalil at the back, who runs an entity called Riba Free Foundation. They're a not-for-profit, and Omar's mission is to bring riba-free finance to the market and make sure that products that are promoting genuine halal forms of finance are becoming more and more prevalent. He's doing absolutely amazing work, so do make sure you grab him. He's actually a local